Navigating the aftermath of bankruptcy can feel overwhelming, especially when you're trying to buy a home. But if you're a veteran or active duty service member, there's good news. VA loans offer a clear path to homeownership, even after bankruptcy. Today, we'll walk you through everything you need to know about securing a VA loan post-bankruptcy and rebuilding your financial future. First, let's address the most pressing question. Can you get a VA loan after bankruptcy? The answer is yes. VA loans are specifically designed to help veterans, active duty service members, and qualifying military spouses secure financing. They offer incredible benefits like financing up to 100% of a home's purchase price and often lower interest rates than conventional loans. Now, the process does depend on the type of bankruptcy you filed, Chapter 7 or Chapter 13. With Chapter 7, the waiting period is typically 2 years after the bankruptcy is discharged. This type of bankruptcy involves liquidating assets to pay off debts. Chapter 13, on the other hand, has a shorter waiting period. You can apply for a VA loan while still in a repayment plan, as long as you've made on-time payments for at least 12 months. After a Chapter 13 discharge, you'll need to wait 1 year. Keep in mind, bankruptcy can significantly lower your credit score, which might make qualifying for a mortgage more challenging. But VA loans are more lenient when it comes to credit scores, often requiring a minimum FICO score of 620 and sometimes as low as 580, depending on the lender. Rebuilding your credit is crucial during the waiting period. Start by paying all your bills on time to create a solid payment history. If bankruptcy wiped out your credit accounts, consider opening secured credit cards to establish new accounts. Keep your debt-to-income ratio low. Regularly check your credit report for errors, and limit how often you apply for new credit. Although VA loans don't require a down payment, saving for a down payment can strengthen your loan application. It shows lenders that you're financially stable and responsible and reduces the total amount you need to borrow. Stable employment is another important factor. Whether it's from regular work, pensions, Social Security, or disability benefits, lenders need to see a reliable income source. Staying in the same job or industry can also help, but it's not a strict requirement. One of the most critical steps is working with a knowledgeable lender. VA loans come with unique requirements, so partnering with a lender like JVM Lending, who is experienced in these loans, can make all the difference. We'll guide you through the process, help you polish your loan file, and ensure you meet all the requirements. Finally, patience and preparation are key. Use the waiting period to build better financial habits. Save money, budget wisely, and collect important documents like tax returns, pay stubs, bank statements, and bankruptcy discharge papers. These steps will not only prepare you for the loan process, but also set you up for long-term financial success. Visit jvmlending.com for more info or to talk to a VA loan specialist directly.